So what's going on with ChargePoint stock? To start the year it was trading at about $9 a share, and that jumped all the way up closer to $14 a share in the first month, especially from January to February. The stock really jumped, and then mid-February, you started to notice a decline in the stock price, and it's back down to $9.19, roughly about where the stock started to begin the year. So in this video, I'm going to look at the company's fourth quarter 2023 earnings call, and we're going to try and figure out what's going on with ChargePoint stock. If there is info, and I know there's info in that earnings call that gives some insight as to what's going on. And so we're going to go through that, and that's what I'm going to do in this video. And I don't think you're going to want to miss that. So let's get right into the details. So, starting with the CEO Pascal Romano discussing the fourth quarter revenue, and by the way, this was held on March 2nd, 2023. This earnings call. The CEO saying our fourth quarter revenue grew by 93% year over year and 22% from the previous quarter. So there's no doubt about it. This is an exceptional hyper growth stock, right? It's growing very rapidly, not only year over year, but quarter over quarter. However, the fourth quarter revenue results were below the guidance range and 7% short of the midpoint. So the company missed expectations. That could explain why the stock price came down. The reasons for the miss was firstly a decrease in North American commercial demand during the month of December. Second, while overall supply chain limitations have eased, they persist for certain hardware products. And lastly, we missed the shipment cutoff for certain customers that caused the gap between billings and revenue. So let's break each one of these down. So in the fourth quarter, commercial demand for its products decreased. All right, so that could have been with companies going into the end of the year, not wanting to spend any more money. Maybe they already reached their spending limits for the year, and maybe they wanted to pause the things that they wanted to buy. And instead of buying it in December of 2022, push it out 1 month and buy it in January of 2023. So the second thing is, yes, overall supply chain disruptions are easing, and they have been easing for many companies worldwide. However, there are still lingering problems in the supply chain. Not everything has been resolved, and so there is still some issues, namely some legacy semiconductor chips shortages. There's still things that are disrupted, and that's impacting ChargePoint. Um, and finally, they a matter of timing, so they couldn't meet a cutoff date to ship these certain products, and so because they missed that cutoff date, the revenue wasn't booked in the current quarter. That's not necessarily bad news because now those sales will be accounted for in the first quarter, in the next quarter. So the last one is not necessarily any bad news. It's just a delay in terms of when they were going to recognize their um, revenue. So here's something I find to be interesting is that the company is forecasting or planning to be cash flow positive in the calendar year 2024. So next year, they plan to be cash flow positive, which would be incredible for a company that's growing as fast as ChargePoint is, in a company that is so cost intensive, right? It costs a lot to build out these charging stations, ship them out. So this isn't this isn't an asset light business model that can quickly go to cash flow positive. This is a difficult type of business model to turn cash flow positive. So if the company does indeed achieve this goal in calendar 2024, That would be incredibly impressive. So, one major announcement that came out in the fourth quarter was the deal with the United States Postal Service and with their distribution partner Rexel. This is critical. It's going to be critical for ChargePoint to make these deals with institutions and enterprises, because these are the commercial, the enterprise are the ideal end consumer for ChargePoint products, right? Instead of households, it's more vital for them to get businesses, to get large apartment complexes, to get large federal buildings, right? This is where thousands or hundreds of cars go to park every day, and it's an ideal place to charge your electric vehicles. So even with the limitations of vehicle supply in the vertical, the fleet is already a significant component of our revenue and a coiled spring for when the vehicles are readily available. So when EVs really start to ramp and production really ramps up, that's going to be a coiled spring that unleashes demand for ChargePoint's charging stations. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the company's participating in nearly every vertical of the EV charging in both Europe and North America. Not but that not only fuels their growth, but also provides resilience in the face of short-term emphasis shifts across verticals and geographies. And I will note here that although the company is in Europe, the vast majority of its revenues are from North America for now, although its European segment is growing faster than North America. ChargePoint now has over a dozen automotive partnerships live, where ChargePoint Cloud Service aggregates access to all major public charging networks in Europe and North America via the OEM's dash system or companion app. So this is a big deal. They're connecting with manufacturers to have ChargePoint stations input on the navigation systems of these cars. So if you're driving, a Honda or whatever car you might be driving, EV or Tesla, or well, probably not Tesla, they've got their own charging stations, but another EV car, you can look up on your navigation and it'll tell you where the nearest ChargePoint station is. That's really good for the company, right? Because that will direct you to their stations where people will use and consume their products and services. And then many OEMs offer the ChargePoint home charger and recommend us to their dealers for their charging needs. So it's good news for ChargePoint and their investors that they're making partnerships with OEMs, and the OEMs are acting as distribution partners for their products. So that's expanding the sales network for ChargePoint in a great channel, right? That's where people go to buy EVs, and when you buy an EV, it's a great time to also buy a charger for your home. So that can be those are good partnerships for the company. So they finished the quarter with over 225,000 active ports under management, including 18,900 direct connect ports, with just under one third of their overall ports in Europe. So this is going to continue growing. They're still in the expansion phase of the business. So moving on to the CEO. The CEO now says that network charging systems represents our connected hardware, and then subscriptions include our cloud services that connect to that hardware. Okay. Moving on, the fourth quarter billings percentages, 69% were commercial. Remember, I highlighted that commercial, enterprise, institution are really going to be the bread and butter for ChargePoint, at least over the near term. At least over the near term. And then residential is only 11% of its business right now. North America was 86% of revenue. Europe was just 14%, like I mentioned earlier. But Europe is growing faster. So if it continues at this rate, Europe can continue to grow to a larger percentage of the overall business. So while I mentioned the company is growing rapidly, they are losing a lot of money on the bottom line. So this is interesting that the company says they're making progress on cost reductions. They're selling their products at higher average selling prices, and there's incrementally lower supply chain headwinds. So all three of these factors are working to improve the company's profit margins incrementally. Even though they're still losing a lot of money on the bottom line, these factors are incrementally helping it improve. And they finished the quarter with 400 million in cash, a little bit more than the 398 million they started the end of Q3 with, but they used $50 million. They sold $50 million of their stock to raise capital in an at the market offering, right? So they used up 50 million and they raised 50 million, and to bring themselves back to 400 million. So far, prudent cash management there. And um, if they're gonna be cash flow positive by 2024, then the need to raise capital is going to diminish if they're cash flow positive, right? Because that makes the business self-sustaining, which is really, really good news if you're looking at ChargePoint as a potential long-term investment. And I'll end with this final comment from the CFO here, talking about the guidance for 2024, for fiscal 2024. They expect revenue between 122 million and 132 million, which would be a year-over-year increase of 56% at the midpoint. But recall, they usually see a sequential drop in the first quarter. This is nothing new. And then they also expect to continue to see sequential improvement in the gross margin this year as supply chain challenges continue to ease, their cost improvements, and they get to benefit from higher prices. So they're still with their cash flow positive goal by the fourth quarter of 2024. Again, if they are able to achieve this, I would name this an impressive feat. Reaching this milestone with the North American EV passenger fleet estimated by Bloomberg at just under 5% and then under 8% in Europe would really position the company well. So they're planning to be cash flow positive in Q4 2024, and at that point, the EV penetration of overall cars, like the percentage of electric vehicles compared to overall cars, is still going to be less than 10% in the US and Europe, right? 5% in US and 8% in Europe. So if it's cash flow positive at that point, imagine where it could be when, EVs are 20, 30, 40, 50% of overall cars in the US and Europe, which seems like that's the direction that the world is heading in, right? I don't know how quickly it's going to get there, but it seems like that's the direction the world is headed in. So good progress from ChargePoint so far in the quarter. I like the forecast. I like the focus on turning cash flow positive as quickly as possible, and I like what they're doing so far. And this is certainly a company to look out for. The rapid growth of rising tailwinds from the industry, and so this could be a big huge return on investment type of stock, although it does come with a very high degree of risk. All right, so that's all I've got for this video. If you like this video, I'm going to add a few videos. You're seeing them pop up on your screen right now. I think you're going to enjoy those. So click on one of those and I'll see you over there. Thank you for watching.